The tightening cycle that Powell began in 2022 has ended. They've been cutting rates and continue to cut rates. They just did so a week ago. And now they've announced they're going to stop the tightening of the balance sheet and actually go neutral. And they even went so far as to say they would probably have to start adding to it, which is, as we all know, printing money. I wrote a book about that called The Big Print. And so, that set of facts combined with what I think is happening in the world is everybody's becoming aware of this. I mean, I think a year or two ago, you or I, or most of the people at this conference, gold investors, et cetera, we were all aware of this issue. I mean, this was not like, headline news to us. It was just that nobody else was paying attention to it. And that's why we were buying gold and gold stocks, and we believed this was coming. And now we're kind of being proven right? It's arrived. And, you see it probably the best way I, look at seeing is what's in the main media. And, you've now got JP Morgan calling this the monetary debasement trade, right? And you've got, Morgan Stanley saying, the new allocation for, investors should be 40% or 60% stocks, 20% bonds, 20% gold. And I'm like, what? That's different. It used to be zero gold.
In a time of increasing economic instability, investor and fund manager Larry Lepard argues that gold and silver remain the most reliable assets for preserving wealth. Through his analysis of monetary policy, market cycles, and historical trends, Lepard explains why precious metals are positioned to surge as global currencies weaken. Lepard begins by addressing the core issue facing global markets. Governments are printing unprecedented amounts of money to keep economies afloat. This expansion of currency supply, combined with rising debts and artificially low interest rates, creates an illusion of stability that cannot last. He notes that every time financial pressure builds, central banks respond by creating more money, kicking the crisis further down the road, but weakening the currency in the process. This slow erosion of purchasing power is felt by everyday citizens, even if official inflation numbers attempt to hide it. Lepard warns that confidence in fiat currencies is already thinning. When people begin to recognize that paper money is losing value more rapidly than before, they will look for alternatives that cannot be devalued by political decisions. According to Lepard, gold and silver aren't speculative assets, they are real money. They have maintained purchasing power for thousands of years through wars, market collapses, monetary resets, and political change. Gold and silver cannot be printed. Their scarcity gives them intrinsic stability. Physical metals act as insurance against financial repression and currency debasement. Every major monetary shift in history has involved a return to hard assets. As currencies lose value, precious metals gain value, not because they change, but because the measuring stick, fiat money, becomes weaker. Lepard believes we are approaching another turning point in which the world will rediscover the importance of sound money. Throughout his talk, Lepard highlights that gold and silver prices do not rise steadily. They move in powerful bursts. These explosive moves typically occur when the public suddenly realizes that economic conditions are worse than previously thought. Gold could break past previous highs with significant force. Silver, historically more volatile, could outperform gold during the next bull run. The early stages of this movement may already be underway as investors quietly accumulate metals. He stresses that once fear enters the market, most people will rush to buy gold and silver. But by then, prices will be far higher. Lepard's message is clear. Those who understand the long-term risks in the financial system should position themselves now, not after the crisis becomes obvious. He reminds investors that precious metals are not about quick profits. They are a strategy for wealth preservation in an unstable monetary environment. In his view, gold and silver represent protection, not speculation. And in a world built on debt, printed money, and political promises, that protection will become increasingly valuable. Now, we present the clips from Larry Lepard interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you and enjoy the video.
What is the quick move of the gold price telling us about what's going on in the world right now?
Yeah, that's a really great question. And I think it's pretty simply explained by the fact that gold smells the coming monetary debasement. We could drill down a lot on it, but at a larger picture level, the Federal Reserve is trapped. The credit-based system that we have requires continual expansion of the money supply and inflation in order to prevent it from collapsing. They have been trying to reduce the Fed's balance sheet and keep money tight, but they've already had to somewhat pivot on that. More than somewhat, they've started to pivot on that. The tightening cycle that Powell began in 2022 has ended. They've been cutting rates and continue to cut rates. They just did so a week ago. And now they've announced they're going to stop the tightening of the balance sheet and actually go neutral. And they even went so far as to say they would probably have to start adding to it, which is, as we all know, printing money. I wrote a book about that called The Big Print. And so, that set of facts combined with what I think is happening in the world is everybody's becoming aware of this. I mean, I think a year or two ago, you or I, or most of the people at this conference, gold investors, et cetera, we were all aware of this issue. I mean, this was not like, headline news to us. It was just that nobody else was paying attention to it. And that's why we were buying gold and gold stocks, and we believed this was coming. And now we're kind of being proven right? It's arrived. And, you see it probably the best way I, look at seeing is what's in the main media. And, you've now got JP Morgan calling this the monetary debasement trade, right? And you've got, Morgan Stanley saying, the new allocation for, investors should be 40% or 60% stocks, 20% bonds, 20% gold. And I'm like, what? That's different. It used to be zero gold. And so, you got guys like Mohammed El-Arian, who's a very high profile institutional investor, saying this monetary debasement trade is a big thing and likely to run for a while. And so I think it's just awareness on the part of many, many people that they will have to continue to grow and print money, and that will lead to more and more inflation, and that in light of that, inflation, they want to have things that the government can't print. And the three leading forms of that are gold, silver, and then Bitcoin. So government can't print them.
Well, and I wonder, so we talked a little bit about what you were previously expecting for the gold price. Have you adjusted your, okay, let's talk about that.
I'm trying to remember, what was it when we talked last year? It was like 2,500, I think, when we were talking last year. I'm just guessing. That's by memory. And we thought maybe, I said it would go to 3, 4, 5. Yeah. So it's actually gone a little further and faster than I thought it might have happened. It's like we're really in it now. As you know, we touched, I think, 4,400. We're at 4,000 plus or minus right now. Yeah, no, I've kind of revised my projections. I mean, and that's an interesting thing, because a lot of people think, well, okay, it's gone up this much, it's got to come back. Nothing goes to the sky forever. It's going to correct. And I think that's the wrong way of looking at it, because I think what's really happened here is conditions have changed. We're in a phase change where, basically we now have knowledge that this debasement must continue to occur for a long time, and in my opinion, we're still only in the first, second, or third inning of the debasement. And so, I now think gold goes to 5,000 and then 10,000. I mean, ultimately, it could go to infinity if the dollar fails. That's a tail case and not likely to happen tomorrow. But I think, 4,000, 5,000, yeah, that's easy. I mean, we're already at 4. And, 6, 7 next year, possible. I mean, it's hard to say. I mean, it depends a little bit upon policy and what they do. And I do want to caution people. I mean, the one thing that could blow up this thesis and make me look wrong, or make all of us look wrong, is if the government were to get really responsible. And yeah, right. And you react the way most people do, which is, that's a joke. That'll never happen. And yet, in investing, never say never, because, at some point, somewhere in the future, the government might get responsible, and this trade won't be such a great trade, or this positioning won't be such a great position. But for now, anyway, I feel very highly confident that, these things are going to perform quite well for the next couple of years until they master, they solve this monetary problem. And I don't see the solution on the horizon yet. So one thing that could do it, though, actually, is just a change in demographics. There's some good data I just looked at recently. I mean, the reason Social Security and Medicare are the way they are, and they contribute so much to the deficit, is that the boomer population in the United States is large. If they mess with it, everyone's going to get voted out. Boomers are getting older. There are going to be fewer of them. There are more Gen X and millennials and others voting. Eventually, those boomers aren't going to have that much voting power, and they are going to have to reform those things. And so there, there will be some kind of fiscal discipline coming at some point in the future. But, my sense is that could be several years away. And I think right now we're really in the heart of, what I think is going to be a very attractive period for the things that we own.
Well, and I have to check in with you on silver as well. If you've adjusted up your gold price, I imagine.
Yeah, that's a great question. So I love silver. As you know, it's in a structural deficit, has been for a number of years. it's a dual metal. It obviously has a monetary role and it has a gold role. And the fact that it's finally come along and hit a new all-time high, that's really important. When gold was going up and silver wasn't moving, I was like, okay, we're still not in it yet because we got to get silver going. I mean, there's no real precious metals bull market without silver just going crazy. And as we all know, silver took out the all-time high of 50, which had been hit twice. And, so my new view on silver is probably, next 6 months, 75 is a very realistic target. I think 100, 150 are realistic. I've seen people talk multiple hundreds of dollars and even $1,000 for silver. I don't know. I mean, that's a long way out. But I think, inflation adjusted, the old inflation adjusted high for silver was like, $150, $200 an ounce. So, I think getting to 100 is going to be easy. And the thing that's interesting there is I manage a fund that invests in gold and silver stocks. And, these silver miners, a lot of them have costs to mine an ounce of something between $20 and $30. And, if the price of silver goes to $120, that's a heck of a profit margin. And so these stocks are going to be very, very attractive things to hold. And that's why I hold them. So the general gold stock indices are up about 100% year to date. We're 10 months into the year and now 11 months, start of the 11th month. My fund was up 130% through September. So yeah, we had a lot of gains. But, and some stocks went too far too fast, and I started lightening up on those or selling some of those. But, these stocks were criminally undervalued last year. I mean, just criminally undervalued. And so they've now doubled. And my view is they're cheap. They're still not fully valued, but they're not as cheap as they were. Obviously, buying a year ago would have been better. But I look at the multiples of cash flow. I look at the potential for growth, et cetera. And I still feel pretty good about owning most of these stocks. I haven't sold a lot of them. I've only sold a few of them, and the others I've just kind of sold maybe a touch at the margin. So I'm very confident that we'll have another doubling in those stocks in the next kind of year or two, which by any measure, I mean, the S&P is up 18%. I mean, if, and maybe I'm wrong, maybe they only go up 50% from here, but that's still pretty good performance. And so, I feel like if you look at historical gold stock bull markets and how these things have traded, they tend to have a couple of good years in a row. And maybe then at some point they'll become overvalued. And maybe then at some point, governments will get more fiscally responsible. Maybe gold will check back, whatever. Those things do lie out there in the future somewhere, but I actually don't think they're out there in the next 12 months. I feel like we're right in the middle of it right now, and it's going to keep going. And it's sad because I think a lot of people have been saying to themselves, and they were saying this all this year, well, gosh, they're up a lot. Maybe I'll wait until they pull back. Well, they haven't pulled back. They haven't given you. And some people are probably looking at it today and going, oh, I don't know. It's gone up so much so fast. I can't really buy it. I'll wait for a pullback. And actually, you're having a little bit of a pullback right now. I mean, they're down kind of 10% off the highs or maybe 15%, some of them off the highs. But I mean, my view is that might be all you're going to get. I mean, maybe they come to 20% off the highs. I don't think they get 30. If you do, great, and you can buy them there. But I think we're gonna, we will, as we move through the year, as the Federal Reserve transitions to QE and maybe yield curve control and money printing, the metals themselves will catch another leg up. Gold will go through 4,500 towards 5,000. Silver will go to 60 or 70. And these stocks will all go up another 30% pretty easily. And then maybe more, over the next 12 months. So if you don't have any position in this stuff and you're looking to get some, I would buy some just right now. Just get in it, because this could be all we get for a pullback. But maybe if you're worried that they're going to go lower, maybe you buy half or a third or whatever, and you hold the rest, hoping that you get something lower. And then if it turns out 2 months from now they really haven't gone lower, they've kind of gone sideways, you might just say, "Ah, to heck with it. I'm gonna invest in the whole thing." I would say the best leading indicator, I think, for where they're going is the silver price. So silver is the most volatile. It's kind of the, it's just starting to take off. I mean, watch silver very carefully, in my view. Because silver will tell us how, quote unquote, on this thing is. And so we went through, I think we went to 53, maybe 54, we came back to 50, and then we were like 48 or 9 for a while. Maybe, I don't know where we are this morning, but we're somewhere around 50, plus or minus. We go through that 54, 55, 60, it's back into game on. We're going to go to 70, and then all the other stuff will move too. So I watch silver very much as a leading indicator. It's the leader right now, what's going on. It's gone up more than gold this year. Silver stocks have gone up more than gold this year. So to me, it's your best indicator.
Larry Lepard warns that the global financial system is becoming increasingly unstable due to excessive money printing, rising debt, and artificial interest rates. He argues that this ongoing currency debasement is destroying confidence in fiat money and pushing investors toward assets that cannot be manipulated. Lepard emphasizes that gold and silver are not speculative plays, but true forms of sound money that have preserved wealth for thousands of years. Their scarcity, intrinsic value, and resistance to political interference make them ideal protection against inflation and monetary collapse. He explains that precious metals tend to rise in sharp, powerful surges, often when the public suddenly realizes the severity of economic conditions. Lepard believes that both gold and silver could soon break out to much higher prices, with silver likely outperforming during the next major bull run. His core message: prepare before the crisis, not after. Gold and silver provide long-term security in a world increasingly built on debt, money printing, and financial illusions. Those who accumulate early will be better protected when confidence in fiat currencies finally breaks. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.